Hello everyone, Justin with Deep Dive Stocks here, and today is your after hours market dive for September 25th. It's Thursday. Let's get started. First up, I figured we would look at how crypto is looking on the liquidity scanner now that markets are closing. And we see that predominantly we have bearish prints, but there is some sneaking bullish prints here on Ethereum and Solana. But everything else, Bitcoin, Doge, XRP, and ADA, look bearish as we progress from the traditional equities market as they close and traders pile into the crypto market. So tentative bullish, new bullish prints on Ethereum and Solana, but everything else is still looking predominantly bearish as the day was. Actually, let's start here. We see that overall the market was exceptionally bearish today. I don't know if you remember, but yesterday's video had a little thing that said bearish liquidity is coming, and it seems that it is here. And so now the name of the game is, how long is it going to stay? What's it going to do? And do we have to prepare the guest bedroom? So let's check out first GME. We have, for the past few days, we've been tracking this bullish liquidity as it's made its way to LTPML6 at $29. But we did say, that movement to LTPML7 to use that as a support is within reason. And it looks like that is exactly what's happening now. So price has fallen during this overall bearish performance in the market right to LTPML7. And it looks like in the after hours, we can even see through this blue dash line that a little bit of a bounce off of this support has already occurred. But so as long as LTPML7 holds, and we can anticipate that by if LTPS starts painting any of these candles bearish, then it means LTPM may not hold. But since things are still bullish, the candles are green, LTPS is printing green candles, then we expect the support to hold. If we zoom in to more near-term futures, we see that we are pretty much, unfortunately, wholly bearish, but we do have a little bit of evidence of this encroaching LTPML3. And if that scoops under spot, that'll be a nice indication that dip buying has occurred, and spot will likely slowly move back up. So it'll be important to watch LTPML3 over the next few hours and even into market open tomorrow to make sure that those dip buyers are, doing their job and helping spot move back up. But overall, unfortunately, on the 15-minute, this is still a pretty bearish view. And if we move up to the hour, effectively just trying to see where the bullish liquidity sort of starts, because we saw it on the daily, but down on the 15 we see it's bearish. So if we move to the hour, we do see, unfortunately, bearish as well, but somewhat good news is that this is a bear trap, but we have already fallen back through LTPML7 support. So not the most promising. And then unfortunately on the 4 hour, so this is looking like the daily is going to have to be watched quite substantially. So we do have bearish liquidity. It's brought things down to LTPML5 support, and we've fallen through it. It is just an aggressive ask, pushing down to the bid. So hopefully this LTPML5 will be able to absorb that aggressive ask and then stop any additional bearish flows. And so I would actually say that the 4 hour is where I would keep my gaze to help decide, is the bearish liquidity going to make its way up to the daily, in which case we have to worry about that LTPML7 support failing, or is from this view, do we have enough support to absorb that bearish liquidity, and then in which case we have additional support and additional evidence that the support on the daily, that LTPML7, will actually hold. And so it seems like the 4 hour is a good view to see that transition zone to keep an eye out for. So I recommend doing that. Moving to Bitcoin, we noted the bearish liquidity yesterday and how we had moved and we're starting to push through LTPML7. Today, it seems like definitively spot has moved through LTPML7 and is maintaining its bearish prints. So expected downside is the expectation, I guess you would say. Moving into the 15-minute, we see that bearish liquidity is still quite pronounced, and LTPML3 came down quite aggressively, but it turns out not to act as a buying the bid, buying the dip, but rather as a means of just reaffirming their aggressive selling. So this is a particularly bearish print for Bitcoin, especially because, again, on the 15-minute, we see this pretty, just established bearish liquidity, no evidence of LDPM scooping under spot to act as dip buyers, but rather evidence that the profit taking has actually just doubled down. It's moved downward spot and is now throwing more ask into the pot. So the Bitcoin on the daily is looking pretty rough. And then I actually didn't even know how bad Ethereum had been doing. We've been focusing on Bitcoin. So we have the Ethereum's bearish liquidity chewed through LDPM L5 support. It took a few days, it seems. And now, as is expected, with bearish liquidity, we are going to move down to LDPM L6, which is currently located a hefty not I guess too hefty from here, so 10% still. But we can see from that LDPM L5 support, it was 25% down. So we're in the it seems that we are in the midst of this expected drawdown because of this bearish liquidity, and it looks like we are approaching LDPM L6 support here soon. And it'll be worthwhile to check back in on things to see what happens as spot and LDPM L6 support match up. Is that support that organic bid? Is it going to inject bullish liquidity back into spot? Are we going to get a nice, combination of value seekers working to absorb the ask, plus the reemergence of this eager bid to push spot back up? Or are things going to continue to deteriorate, bearish liquidity persist, and then spot chew through that LDPM L6 and then eventually LDPM L7 resistance? But all we can say right now is the expected outcome is movement to LDPM L6 with the intention and plans to monitor things as they get there. In terms of SPX as a whole, the S&P 500 has printed yet again another bearish print as it rests directly on LDPM L5. This is not the most promising of prints if you are a die-hard bull. We can already see that through LDPM L3, which is above spot, so there's already some pretty aggressive profit taking occurring. And now that this has officially ended as a bearish candle, that means that it is likely going to retest LDPM L5. And as long as bearish liquidity continues, we can expect it to keep retesting those supports, and then ultimately those supports will fail. So if we look at where price might move as those supports fail, we have not much movement for the LDPM L5 support because we're already testing that. But if it breaks through LDPM L5, then we have about a 1.2% down to LDPM L7. And if bearish liquidity continues and that liquidity and the support fails, then we're looking at a 3% down until we get to LDPM L6. So the current liquidity on S&P 500 is once again bearish, and not good for those who might think that this might just be a quick one and done, maybe 2-3 day dip. On the 15-minute, we do have a little bit of evidence. So this is the evidence that we were kind of looking for on GME, unfortunately, where we have the LDPM L3 has moved down and sort of moved under spot. So now we know that there are in fact dip buyers in the market. Now that liquidity is bullish on the 15 minutes, so we're talking our time horizon here is tomorrow into the next day. We can expect maybe a little bit of a bounce, 0.63% up to LDPM L5 to sort of keep things interesting. But with kind of how little this bullish liquidity has already done, which is really just work to flatline price, even with these dip buyers, it's a little bit of hand waving suggests that it might be more like this as the bearish liquidity returns somewhere along here in this period, indicating that, yeah, we're probably not going to make it up to LDPM L5 this time. So with bearish liquidity, soft bearish on the daily, we notice that there's a little bit of a pink versus a deep red. And then on the 15-minute, we do have this bullish liquidity that looks to so far not have been doing much and has not done much. So still leaning towards bearish performance on the S&P 500 as we move into Friday. Gold is doing phenomenally well, as we can see here on the daily. No real issues. The main thing that we keep an eye out for during these large price appreciations is that LDPM L3, 2, 1, and 4, those eager bids or those eager parties that tell us when people are profit taking if it's above spot, or buying the dip if it's below spot. We see that it's still below spot, so people are still actually buying. In other words, there's no evidence of aggressive profit taking, which might sap the bullish liquidity that's pushing spot up. You don't really want it to have to contend with profit taking, because then you're going to get a stifled price action, but yet you're expending a lot of bid you're expending a lot of that bullish liquidity to absorb, which leaves less liquidity to move spot. So although price has stagnated recently over the past 4 days, it seems kind of just hung out in this area, the lack of evidence of profit taking does suggest continued spot appreciation. And then if we zoom in on the 15-minute for the next few days or so, we see that there was evidence. There is a little bit of evidence. So we got bullish liquidity. We tested out of PM L7. We rejected, but liquidity has maintained bullish. And so we expect another test to come. And if we look at so that's about 0.25% up, nothing too remarkable, but about 0.84% up for if LDPS, or if gold makes it through that LDPM L7 resistance with its bullish liquidity. So pretty bullish on gold as well. Silver is a similar tale. We see a much wider gap between SPY and LDPM, which is a little concerning. So this is effectively, that's supposed to be one of those, so this is a liquidity vacuum. And I'm going to talk about that in this weekend's more long-form video. And the idea is, in a nutshell, when you see these rapid price appreciations, you want to see the organic LDPMs start to slowly move up with spot. In other words, those just tell you that the value seekers are moving up and thus are readjusting their expectations so that they can buy high today, a little bit higher, but the difference in how much higher they're going to be able to sell tomorrow makes it worth it. So, but they're not really doing that right now on silver. It looks like they're pretty, and that's why typically you want to see sort of like this type of action. So this, where the supports, those organics are just kind of really nice and riding upward spot, because this tells us that we have in very, eager bid, even as LDPS tells us that. It's eager bid. And they're pushing spot up from that organic bid to the ask. And in fact, that's what LDPS is telling us again. And the issue is, if these eager bids disappear, well, then who's going to be bidding? No one. And so what's going to happen if you need to transact, you have to move all the way down to the organic bid, because all of the eager bid that was kind of moving up to get spot to move is now gone. And those can cause some rapid price adjustments. And right now we see the support is about 13.45% down. So that could potentially, high risk for this liquidity vacuum to collapse, but we don't really see any evidence of profit taking. So it's really just down to this eager bid in terms of how long it's going to hang around and how much more silver it's going to take up. But on the daily, this is looking exceptionally bullish. We just have to keep an eye out for any signs of, the eager bid disappearing or, more aggressive profit taking. The 15-minute is a lot messier, as you can see. So let's just kind of get rid of LDPM real quick. That doesn't really help, but it's still messy. But we do have bullish, LDPS is bullish, and we've broken above LDPM L6 resistance. And last time that happened, we started getting this early signs of profit taking, which pushed spot back down to the support, the LDPM support. And again, we don't really have that. We do have an encroaching LDPM L3, so definitely another thing to keep a close eye out for. As long as this profit taking doesn't get too crazy and doesn't spend too much time above spot, then the bullish expectations should continue. But keeping an eye out on this profit taking is going to be key. And moving right along, Tesla is interesting, and this is what I mean where that, another encroaching profit taking. So we have this L3 zooming up, and this is the, a few weeks ago we had that aggressive bid cascade, and now spot is up. We're the price is stagnating, and we have some evidence that profit taking is really starting to move in an aggressive manner up to spot. So LDPS is still saying that things are going to be able to hold through, that the overall liquidity environment is going to be able to digest this. But if the profit taking becomes too severe, then we do see a 13%, that is our zone of correction from this liquidity vacuum down to LDPM L5 support is about 13%. And that can happen just as fast as these little bumps up go. I think in traditional terms, if we're like traditional TA, this is what filling the gap would be. But I do think that filling the gap is sort of the shadow of identifying liquidity vacuums, which LDPM and LDPS tell us directly, so that's cool. On the 15-minute, we do see a much bleaker outlook as Tesla is looking wholly bearish. But again, we do have some evidence of this early profit or early dip buying. So this LDPM L3 is scooting below price, and that's exciting. But it'll be, LDPS is still bearish, so we expect that dip buying unless LDPM switches its mind and says, hey, this dip buying is really sufficiently convincing, then I think the environment is now net bullish. If that doesn't happen, then we just simply expect the bearish liquidity to absorb this dip buying, and then the dip buyers will exit as they realize maybe they're not actually buying a dip, or maybe the dip isn't dippeth yet. And so they will exit. You'll see LDPM L3, the traditional response is you'll see this, and then LDPM L3 will scoot up as the price continues to move down. So that is the expected outcome here. Even though we do have the early signs of this dip buying, we really need to see that dip buying plus the introduction of some sort of bullish liquidity in order to be confident that spot is going to be able to muster a response back up, which for Tesla, 3% between here and its current LDPM L5 resistance. 3% isn't the worst for Tesla. It's been known to move more, but on the 15-minute, this is looking particularly bearish for now. So overall, an exciting market. In terms of the question we asked at start, now that bearish liquidity is here, do we need to get the guest room ready? And it is starting to look like on some names, the guest room is in fact should be got ready. The encroaching profit taking, even though LDPS is still tentative on Tesla, Ethereum's continued expected movement is still, quite substantial. Bitcoin is looking bearish. So Ethereum still has 12% to go if we listen to LDPM and LDPS. Even though this is a bear trap, we still expect it to move down that 12%. So we have that bearish liquidity on Bitcoin, bearish liquidity on Ethereum, that newfound bearish liquidity on the S&P 500. Gold is bullish and no evidence of profit taking. Silver is bullish with no evidence of profit taking. TLT is bullish. It's probably resting on support. It always moves up and then so we do have a little bit of profit taking on TLT, but we have bullish liquidity on the 15-minute. I imagine bullish liquidity as well. So we had a little bit of this bearish stent, very messy liquidity environment at the start of today. Very unfortunate. But it looks like LDPS turned bullish at noon, made it through LDPM L7, LDPM L6, made it through LDPM L5, and is now bullish with free ring and no evidence of profit taking. So TLT is bullish, silver is bullish, gold is bullish, GME is tentatively bullish on the daily, but that 4 hour I think is going to be key to keep an eye out for. We really want to see not that, right? Like we really want to see bullish liquidity continue, spot make it back over LDPM L5, even if it's resting on LDPM L5 and just constantly like tapping it for that organic bid support. It's still better than this sort of orientation where we had this aggressive ask that's pushing things down to that organic bid. But everything else is looking spectacularly bearish. Tesla, Nvidia, S&P 500, Bitcoin, Ethereum. So I think unless you want to have to awkwardly make the guest room after your guest has already arrived, it does look like making the guest room for bearish liquidity throughout the market is the prudent thing to do currently. So that's Justin with Deep Dive Stocks. This is your after hours market dive, and I will see you guys later. Happy trading, and it might get exciting. So buckle in.